Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So be careful to look at these V's and look at when you saw the back and forth action previously, because if it is substantially stronger than average, it's not going to be able to get to that target level as easily as it would otherwise. So with a V like this, your target zone is going to be just ahead of that previous high. Like that. And here's an example of it. This is in the YUK, which is the, it's supposed to be the US dollar, Japanese yen. And if you look at this, my annotation is wrong at the bottom of the chart. Sorry about that, guys. But if you look at this, this is the YUK, and this is the daily time frame. And you can see that you have this drop here, and the momentum as it broke higher is very comparable to that downside momentum. Well, instead of this previous high being an exact target level, notice that it fell a little bit shy of that previous high. So by doing that, your target zone is just a little bit under that previous high because you do have this V bottom. If the momentum had been stronger on the downside and the upside weaker, then if this had held under 50% level, you could take this high to this low and then take a breakdown here and then apply that equal move target to it. So A here would equal B here for the breakdown. Here's an example of where the momentum did begin clearly to have a strong upside move coming off of the V bottom. And it had this congestion zone here as resistance. So the middle of that congestion zone is often going to be the strongest resistance when you're looking at congestion zones. You can have previous highs, previous lows, but when you fall into a congestion zone, if you go ahead and transect that zone, whether it's a triangle or a sideways trading range or whatnot, you can go ahead and have an idea of where your resistance level is going to be even after it breaks down and comes back in and tries to retest that level. So originally a target on this is going to be, here's that previous high along with the middle of that congestion zone. So you would be looking at around here as an initial target. And you can see initially it pulled up and came into this zone, but the momentum shifted as it came into the lower end of that zone. And that shifting momentum helped essentially change where that target is. So although you might have had an order on the books to go ahead and take some gains going into, say, 66.8, 66.85 zone, by coming up into this and now having a shift in momentum, you can adjust that and have a trailing stop when this channel here went ahead and broke lower. So basically around 66.7 after coming off of this V bottom. Also looking at trend development, there's another thing, also looking at the building blocks, there's another thing that can come into play when you're looking at setting target levels, and that's the trend. And after pace or momentum, trend development is going to be the most instrumental in determining where your target levels are going to be and whether or not you're going to even be able to hit those target levels in the first place. A trend is really just the primary direction of price action at any given time. So let's say you're looking at a series of higher highs or higher lows on a 5-minute time frame. Well, then you would be in an uptrend. But since trends are fractal in nature, your uptrend could still be taking place on a 5-minute time frame, whereas your daily chart might be in a downtrend. When you're looking at trends, your strongest setups are often going to be when your trends correspond to one another, meaning that if you're looking at a buy setup, you want a setup where not only the larger trend is in favor of a buy, but you have something that is also forming a buy trigger on the smaller time frame. So looking at these trends and looking at where a setup basically takes place is going to be really key in helping determine how far a move is going to be able to progress. When we're looking at this chart, this is just a very basic representation of what a trend looks like, or a typical uptrend here. And you have these series of higher highs and higher lows. Now, in a typical uptrend, as long as this correction between the first and second uptrend and the second and third uptrend takes about the same amount of time, meaning it might be 30 minutes each, it might be 60 minutes each, but you want them to be comparable in terms of how long they take. Then if that is the case, after 3 waves of upside, you're going to have a stronger chance of this trend breaking or forming a longer correction than it did these previous waves of buying. So even if you get a buy setup coming into what would have been a support zone earlier in the trend, it's typically not going to be able to hit the same types of target levels. So if this was a 4-point move on the upside here, 4 points here, 4 points here, even though it's coming off of the same support level, this might only move up 1 point before it pulls back and reverses the trend. And that's because that trend is extended. So even though you have something that might look like a key buy setup where the momentum here is much slower than average, you have a very gradual pullback, it can still just serve as a trap when it breaks higher. Now that might not stop you from taking it as a scalp or taking it as a setup on the smaller time frames, but it will affect how you place the target level on it. Because you know that based upon this, the chances of it breaking strongly to a new high, and particularly to a new high comparable to those previous upside moves, is going to be extremely slim. Now, if these are different amounts of times on these correction moves here, like let's say this pullback takes 30 minutes, but this one takes 45, then you can still get a larger series of upside moves, and it might still have a good chance of giving you a strong breakout. Maybe this is a 15-minute correction. So basically that typical trend development just isn't going to apply as well, although you would have other things on, say, larger time frames that could still give you a good indication of how much potential you have on that setup. So maybe if this here is taking place on a 5-minute time frame, it might be something where it's a continuation move on, say, a 30-minute time frame. So you would take this entire upside move. Here might be your base, and then you might have had downside over here. It goes off the chart. I'll make it a little smaller, where this is your box. So you could measure like an equal move here and use that to serve as a target. So that might give you those higher target levels. Here's an example of that YUK we were looking at earlier. And what you can see here is that in addition to where it was this V bottom, in terms of the momentum, also notice that on that bounce, there were 3 waves of buying, and the momentum slowed on that 3rd wave of buying compared to the previous 2.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.